Thanks everyone for joining us for this interesting conversation. And we have some very, very good folks here who have, so we are thinking about institutions are coming or institutions are not coming. We have institutions here. I think the biggest institutions are here. So let's hear from them. But very quick intro, starting from Prabhakar about FalconX and yourself.
Thank you, everyone. Hi, I'm Prabhakar. I've been an operator and a VC, so I'll bring in slightly different perspectives, hopefully, onto this conversation today. I co-founded a company called FalconX about 5 years ago. FalconX is a digital asset prime brokerage focused on institutions. We're an $8 billion company with a global presence. Prior to my time at FalconX, I used to be a VC at Accel. And prior to my time at Accel, I was a serial entrepreneur, built 3 companies, had 2 exits, 1 failure, and my last exit was to book my show. I'm excited to be here with all of you today.
Anshul?
Hi, I'm Anshul. I'm with Gemini. You all know Gemini, the Winklevoss twins exchange. I handle OTC trading, structuring, and execution for APAC. So essentially, I'm a quant by both studying as well as execution. So before Gemini, I managed a crypto hedge fund, and I worked with AlphaGraph, which is a leading high-frequency firm in India, as well as Cargill, which is a very big commodities house. I'm really excited to be here and learn more about what my co-panelists think about where institutions are going.
Hi, my name is Nitin. Really glad to be here. This is my hometown, so it's all the more special. So I lead State Street, which is one of the largest financial institutions, custodians, mid-office, back-office for traditional markets. And my job is, as a global head of digital asset and technology design, to figure out the entire infrastructure needed to deal with not just crypto assets, but also tokenized form of assets. Second thing I would say is prior to this, I founded blockchain labs and digital asset labs at IBM. So I've been in this space for quite some time and looking forward to this chat.
Awesome. For me, I'm Mahin Gupta. I'm founder of Liminal. We are building custody and wallet infrastructure for the East. So, institutional adoption of digital assets. I think I'm in this industry from 2011. I think it's 2014, 15 when everyone started expecting institutions are coming, and right now we are in 2023. So, Prabhakar, want to understand from you, are institutions here or they are still thinking that they want to come here?
Yeah, good question. So let's take a first principle look at what we mean by the word institution, because that definition varies for crypto-native institutions like exchanges and brokerages versus big TradFi players like State Street here. Right? So crypto-native institutions like prop trading firms, hedge funds, market makers, we've seen an explosion in their growth in the last 5 years. Right? There are over 1,000 firms right now, and we're a $1.6 trillion asset class as a result of it. But the real question is, how do you go from being $1.6 trillion asset class to a $16 trillion asset class to hopefully a $60 trillion asset class? And for that, we need the big boys, large TradFi firms to come into the space. And my personal take is, I think we need to go beyond traditional firms looking at digital assets as an investment asset class and look at adopting it into real-world use cases. That's when we'll see real explosive growth. And I'm personally excited about the potential of stablecoins, for example, playing a major role in big banks, neobanks, or even fintech firms in making cross-border payments a lot more effective, faster, and that's where I think there'll be a lot more institutional adoption coming in the next few years.
Makes a lot of sense. So, Nitin, I want to pick your brain on from Prabhakar, what Prabhakar has said. So let's say you guys are big boys. Are you guys in digital assets, crypto? What do you think? Are you guys adopting it?
Yeah, so one reason I moved from tech to financial services, and that's a trend that we've seen, that a lot of tech folks are moving into traditional finance, especially the big boys, the large financial institutions. For us, the large financial institutions have a different meaning, as you can understand. And I would say that, I would say that if you broadly look into the industry, you have 3 swim lanes. The first swim lane is our business as usual. So you have the FalconX of the world, you have Geminis of the world. They are institutions. They have the same banking needs. Can we extend our existing services to them, whether it's looking into having a DDA accounts and providing banking services? And then you have, on the political spectrum, far left and far right. So if you look at the far left use cases, these are simple crypto type use cases where We are looking into saying that can we custody crypto? Can we provide accounting services for crypto? If you're a fund and you want to have, so these are our traditional services, but for crypto-specific services. And I would say the far right use case, which is to me, lion's share of my time goes into is the whole conversation of RWAs or real world asset, which is tokenization of the stocks and bonds and equities and so on and so forth. The only challenge is, as I think Prabhakar mentioned or alluded to, is that you have a $1 trillion or 1.5 or 1.6 trillion today industry, which is crypto. You have 470 or 480 trillion dollar industry, which is the traditional finance. And the question becomes, at the end of the day, the entire industry, the financial primitives, the borrowing, lending, collateralization, is tied to settlement. And if you tokenize the world or tokenize whatever asset or looking into crypto from TradFi perspective, you still have to solve the settlement issue. And that's why I think things like tokenized fiat, whether it's stablecoin or CBDC, is such an important conversation that I think is now ensuing in the financial services industry.
CBDC, real world assets, stablecoin, tokenization. Now, this is from an outside perspective where big institutions wants to look at crypto, what they can gain out of crypto, okay, or digital assets. What we have seen in last few years also that there is actually a lot of activity happening across the globe in regulatory expectation, in regulatory clarity also. Want to understand from you, Anshul, what do you see as a global trends across the world from Gemini's perspective? How your customers or institutional customers are looking at it? One, the traditional one, and one, the institutions that we have built within our crypto ecosystem.
So right now, regulatory clarity is coming. So I'll refer to the previous question. Institutional adoption is dependent on three things: efficiency, scalability, and security. Now, efficiency has been there, but it's getting better at an institutional level. Scalability is what we've seen a lot. So like the likes of State Street, FalconX. So these are the guys building scalability. And regulations bring the security in. So what we are seeing is, as the regulatory bodies come out with newer regulations, or they are trying to address the key issues which are keeping institutional players away. So as more clarity comes in, more institutionals are getting off from the side. So they've been silent observers. Now they are becoming active participants. We are still a long way to go. It's just a small asset class, but 2 years ago it was a fledgling asset class. Now it's a new asset class. And then it can become a proper asset class. So we are in that phase. Now crypto, everything happens at lightning speed. So traditional assets take 20, 30, 40 years to become a proper decent size of the global chunk, but crypto will possibly do it in a much smaller space. Now, coming back to the regulatory thing, say ETFs in the US, for example, if that approval, whenever it comes so, would bring a lot of comfort to institutional players, because that would mean some kind of a regulatory approval. Now, so how we at Gemini are doing is we are trying to support it as much as possible. We have custody solutions. We're partnering with one of the ETF applicants to provide custody from a crypto native point of view. So it's showing that you don't need a bank for custody. You can have a crypto native entity to provide that. So that's where we think the market is. And similarly, as more regulatory clarity comes in, a lot more players will start allocating a lot more assets to it. That thing is picking up, but still people are cautious. And we as well are being very cautious as to how to approach it, because we take a very measured approach in this. So that's what our stance is, and that's what I think it will continue to be.
So now at least we are acceptable asset class from both RW and digital assets perspective. I want to understand from you, Prabhakar, we are talking about now we are acceptable asset class and we may see a lot more allocation. What you see in terms of general trends across region or across market, in terms of allocation of digital assets, or even if you can see interest around RWA, what are your takes on that?
Yeah, good question. So, look, we have to acknowledge that the market has changed drastically in the last 5 years, right? Where we were in 2018, 19 to now in 2023, we've really grown and matured as an asset class. We've cleared out a lot of the bad players in the last few years, right, which is good for the industry. It does feel like we're very far away still from global adoption, but we are making good strides, right? So from a trends perspective, I think for every step that it looks like we're taking back, we are taking 2 steps forward. And it varies across regions, right? US is unfortunately falling behind in my perspective. From a regulatory clarity perspective, and it's hurting the industry because a lot of innovation is moving out of the country to the East, which the East is benefiting. Europe is doing a fantastic job through MiCA regulation, which they announced just a few months ago. The rest of the world is looking up to that and trying to create that as a framework for adopting their own regulatory approach. Now let's look at Middle East, right? Middle East is actually doing a fantastic job of welcoming with open arms a lot of the players. Now, yes, there's a lot more promise than deliverance in some of the regions, but the intent is there, right? They want to basically welcome Web3 companies. They want to foster innovation in this region. So Dubai, Abu Dhabi, Bahrain, a lot of positive growths there. Singapore and Hong Kong specifically in the last few months has completely turned around their stance on how they're looking at crypto and approaching it, which has actually moved a lot of companies there. India is falling behind for obvious reasons, as Mr. Jayant told us a while ago. I think so the perspectives across regions really varies depending on how mature the financial markets are in those regions, right? So in mature markets like Europe, we are seeing a lot more institutions coming in. In regions like Latin America, which are not financially that mature, you're seeing retail adoption come in, but we are not seeing institutions come into the place at all because there's no regulatory clarity there. There are no big banks, no big players who are coming in and saying, we are providing our brand of trust. So that's my perspective. That's what I've seen across the different regions from trends and perspective.
So I have just one point here, small here. I'm personally looking at India regulation. I think that India has made a decent progress compared to 2018 RBI circular.
Come a long way from there.
Yeah. So I think now we have a taxation clarity. We have at least PMLA clarity. The obligations are there on the players. So I think we have done good, but in general, India was always a little bit conservative on capital markets. But in last few months, what we have seen is that even from the government side, or even we are talking with a lot of businesses here, they are also showing especially a lot of interest in RWA and tokenization. So I think, of course, we are moving a little slow. We are like very big country, big population. So we will move slow, but I think we are on a right trend. But that gives me one more question, Prabha. Anyone can jump in. So like we are still 1.6 trillion asset class. As an industry, we built, I'm not sure about you, but as an industry, we built this 1.6 trillion class from zero, correct? Asset class from zero. Now, but I agree, that there's a 450 trillion gorilla there, okay? And we want to solve that. How we, as an industry, we cross this bridge from 1.6 trillion to 450 trillion?
Yeah, so this is a combination that, and by the way, I'm one of you. I'm working in banks, so help them understand that what the rest of the world is thinking in terms of crypto from that perspective, which is funny because you get labeled as a banker and you're like, okay, I'm hiding now from that conversation. But two things in this, right? One is I view crypto as a fifth asset class. So there are generally, if you look at the industry, they have 4 asset classes, and they've clubbed all the asset in these 4, the cash, securities, alts, and bonds, the debt instruments, and everything else. So we see crypto as a fifth asset class. So crypto stands today, which, by the way, the growth trajectory has been fastest ever for any single asset class in the last decade that we've seen for crypto. So that, to me, is a very progressive thing. But my perspective is not so much as valuation, and it'll come as the adoption increases, as the use cases come, as the new projects come. You'll find the value creation happen in the entire ecosystem. But I'm more focused on infrastructure, and my goal has been convergence. So, for example, our financial system is slow, it's expensive, it cordons people off, it is not very welcoming, for example. And so for us to build a truly global system, and we begin to see glimpses of that, that the ability for me to be able to have an interchangeable element of crypto asset with the remaining 4 asset classes is where my head is at. And today you see, if you had an Ether in India, you Ether in Uganda, Ether in the United States, the rules of engagement are exactly the same regardless of where you are in the world, unlike the financial markets that we have today. And that's how I view it. I view it as an infrastructure modernization play and not so much as a valuation game from that perspective today. And that may change in days to come, I think. But love to get your perspectives as well.
Yep. I'll add on to Nitin's point. So part of the adoption is not just about valuation, it is about the use case. So I'll give you an example. So one Sunday, one of our institutional client calls up and he's very happy. We have done nothing. He was happy for one fact. He was able to do trades, transact it, settle it all in 30 minutes using stablecoin. So Gemini has a stablecoin GUSD, so they use that. But that being said, in traditional finance, to do settlement at an institutional level, it's T+1, T+2, T+3. And that guy in his 30 years of career could not do it. And now he's become a fan and he's saying, what more can I do? So if we bridge the gap, like if we use, see, blockchain and crypto has very big advantages. If those become commonplace in every other asset class where there are inefficiencies, then the institutional adoption, the comfort level will grow. And as the security improves, as the regulatory clarity comes in, institutions will feel more comfortable allocating as well. So that's the reason, that's what it will take. It's not just about, oh, one ETF launches and the market cap jumps, so that's what we need, more ETFs. No, we need a cohesive effort across the ecosystem in all pillars. So that's what's going to make it a very big asset class. And it's going to bifurcate into all the remaining 4 asset classes as well, because there are advantages of using blockchain technology.
So very quickly, last question. So again, as Prabhakar pointed out, institution is a very vague word. We have to define institution. But I also believe that successful institutional adoption is also very vague. So just want to get your final comments on if everything works out from traditional players, from us also, what does successful institutional adoption in digital assets or crypto looks like? Prabhakar.
I have a slightly nuanced take on this. We all expect big traditional firms and institutions to come in and adopt digital assets for investments and speculation. I think that'll only take us so far, right? I think we can go from being a $1.6 trillion asset class to maybe a $10 trillion, which is great. We'll all make money. We'll all be happy. But for true adoption, for this to really make a meaningful impact in people's lives, I think, as I was saying earlier, we need to move beyond just speculation and investment. We need to move into actually integrating into the workflows of the big banks and the big players, and that will only come through real-world adoption. Right now, the infrastructure is being laid out for it. I think we are in the 2013 equivalent of RWAs right now, real-world asset adoption. It'll take 5, 6, 7 years. Regulation has to come in. People have to get comfortable with it. Workflows have to change. The old blood has to move out from some of these institutions. New blood has to come in. And I think we are on the right track. It'll take time. I'm very excited for what the young talent I'm seeing coming into the space, the innovation they're bringing into the DeFi space, which will get adopted in the centralized space too. So I'm cautiously optimistic on what I'm seeing around the world. I think as long as regulation doesn't take a very negative stance for obvious reasons, because some of the regulators are old school minded, especially in the US. So as long as that doesn't become a major hindrance in the next 5, 7 years, I think we'll start seeing the asset class literally 10x very, very easily, or 20x in the next few years.
This reminds me one conversation where we were trying to answer what digital assets contributes. And the crux of the conversation was that this technology and this industry has a capability to bring overall remittance cost from 6% to 1%.
10 basis points, man. Like, why 1%? That's ridiculous. Like, right now, TransferWise is doing 1%. We should bring it to 10 basis points or lower. That's when we can make a transformation.
So, again, I think we have this potential. Anshul.
So, to add on to that, like I said, it's security and scalability. As more custodians come in, the trust grows, the scalability will automatically go hand in hand. So, I agree with whatever points have been made, and we can just say that as soon as regulators give us the go-ahead stating that you're okay to do these things or this is what we are comfortable with, you'll again see an explosion of people using that and coming up with new creative, innovative solutions. So at that point, you will be able to scale. So scalability comes in, security is there, and that's what is going to lead this big institutional push into the crypto space.
So having more sandboxes help?
Definitely, sandboxes definitely help. And having more sandboxes, having more people doing new things is the most paramount thing in those sandboxes.
Nitin?
Just differentiate sandboxes from sandbags. They're two different things, right?
True.
But my perspective, I actually wrote a paper on this topic after all my frustration working with large financial institutions. How do you inject technology to make this change that we're all discussing and excited about, right? So I think in my paper I talked about the two impediments, right? One is the fact that interoperability not just in terms of protocol interoperability that we talk about in crypto world, but interoperability between the velocity of asset movement on this tokenized world versus the messaging world that we are used to. And second thing I think is harmonized operational framework. Because banks in general have made all the investment in the last 50, 100 years. There's fee compression, there's this whole notion of the fact that they're running the shop smooth. It's inefficient, it's cheap, and they have a business model around it. Suddenly now to be able to make the right sort of investment to do this requires a little bit of political will, if I can use that word, to say, okay, I'm going to spend 40, 50, $100 million to be able to do these things, so then I can reap the benefits. And under this constant regulatory challenges, which has a cost to it, and the ability for them to be able to make that investment and justify that investment, I think is the biggest challenge. So I think institutions are their biggest, worst enemy in understanding the potential of this technology, and I think they can see this, as what Prabhakar mentioned, they can see this sort of industry slip away, and my hope is that they should be able to understand the trend and adapt to it.
Very good. So last one very quick poll, very quick. Are institutions here, or they are coming, or they will come?
Crypto native institutions are here. They're going to stay, and they're killing it. The big boys from the TradFi world, they're going to come. They're going to be our exit liquidity. But on a more serious note, I'm seeing a lot of progress, right, which is very promising. I think in the next 5 years, if we have the same conversation, I think we'll have 10x more larger firms, starting from Europe and Southeast Asia, and then followed by US in this space.
Very quickly, Anshul.
So I agree, crypto native firms are already here. We have brought the TradeFi firms to the door. They just have to step in now.
I would say institution is embracing it.
Awesome. Thanks for your time, everyone.